Michael Raneri on my left. Next up is Bill Robbins, first time my panelist ever, so welcome, Bill. Bill's the newly appointed CEO of WealthForge company, and I'm going to use my notes on the iPhone since we talked about Apple a lot here, so no phones. Bill brings more than 20 years of experience in growing brokerage platforms and provides strategic oversight and leadership at WealthForge as the CEO. Most recently, he served as president of BB&T Securities in Richmond, leading teams that supported the firm's brokerage platforms and operations. He earned both an MBA and bachelor's degree from the University of Richmond. Welcome, Bill.
Thank you.
And finally, my dear friend and the coolest person we have at our symposium each year, Dr. Kelli Keough. Kelli is with JP Morgan. She currently is the global head of digital for wealth management at JP Morgan Chase. She also sits on the board of this Global Wealth Management Operating Committee, which is a senior leadership team group responsible for strategic matters within the JP Morgan Private Bank. Prior to that, she was at Charles Schwab running the trading services, active trading, including Option Express. And Kelli is a graduate of, she's a professor of psychology at the University of Texas at Austin. I didn't know that part. She's a graduate of, from a doctorate in social psychology from Stanford. So welcome, Kelli. All right, so we're going to kick off. We heard a lot today, right from Bob's presentation this morning. A lot of talk about health, fintech, health tech, disruption, innovation. So we're going to continue on that same stream, if you would. So let me go back to the basics, right? That's what we're going to do in the panel. Have fun and go back to the basics. So I'm going to start open with a question to all of you. What is fintech for you guys? So let's start with Michael.
Yeah, fintech, I don't really like the word fintech. Financial services has always been about better, faster, cheaper through the use of technology, innovative business models, and disruption. I love David's talk in the beginning. I too started my career ripping off order tickets from a printer, looking at a green screen emulation, and then typing them in a teletyper for the first online trade. And it's always been from that point forward about how to improve the process, whether it's eliminating paper, eliminating process, making things faster. Really what it is, and PwC has this point of view, it's really an ecosystem. It's a cultural mindset. Every innovation and every disruption really isn't just one thing. It's usually the coming together of some technology, some disruption, larger incumbents, larger technology players in an ecosystem and working together to actually build the next and best thing. Very few things just come out of thin air. They're usually built on top of or integrated with something that has come before them. So for fintech, for me, it's the ecosystem of the technology, the incumbent financial services firms, even the large tech players like Google and Facebook, and the smaller early stage startups.
Got it. So Bill, you've been at a traditional bank and now you're at a fintech company. What does that mean to you?
Yeah, Tito, I appreciate it. I love this question because if you had asked me a year ago, I think I would have had a very different answer. So the first 20 years of my career were spent sitting out there with you guys. So I started at WealthForge Securities in the clearing business for 12 years, last 10 at BB&T Securities. My former colleagues are sitting in the back making funny faces at me right now, which is fun. And then for the last year, I've been CEO of a fintech company called WealthForge in Richmond, Virginia. And I've really gotten a different perspective on fintech. And I want to just share with you one of the sort of branding exercises we did at our firm and then try to relate it to what I think is really the opportunity for all of us in this room in wealth management around fintech. So obviously fintech means finance and technology. And when we talked about how that works with our business and our brand, we talk about WealthForge, and you sort of have that interplay between finance and technology. And oftentimes, we talk about that in terms of trust, in terms of financial services, but innovation, around technology. So one thing I want to say is that fintech is not just a smaller version of us here in wealth management, and we are not just a larger, bigger version of fintech technology. I think there are some fundamental differences. So to just play on that kind of word association with innovation and trust, I think fintech is genes, right? So I love Bob's discussion earlier, and when I went to work at Fintech, it's folks are wearing t-shirts and jeans. Now I was going to go full Fintech on you today and wear my jeans, but honestly, I was unable to overcome 20 years of cultural conditioning, and so I put on my corporate uniform with slacks and the blazer. Fintech's like the Mac guy, if you remember those commercials, the kind of cool hip Mac guy, and there's the PC guy, we're traditional financial services. And so I think it's just important to understand that Fintech doesn't speak our language here in wealth management, but we want to. There are important cultural differences. The heroes, the rock stars at our businesses in wealth management are the top producers, right? It's the large broker teams. The rock stars in a fintech business are the lead engineers, the ones that are building software. And so I think there's a kind of an important cultural gap that it's important to sort of first understand, and then we can all be understood.
Great. Kelli, you actually went the reverse, right? You were at a fintech firm, startups, right, back in Austin. And then you joined Schwab, and now you're in a large bank. So what does that mean to you, fintechs?
Well, I somewhat agree with you that fintechs are not new. I mean, we've all been working with vendors for many decades, and that's been part of how we in financial services, we work with Thomson Reuters in order to accelerate our news and our information. So it's not new in that sense. But I do think that what is different and new is the mission-based philosophies behind fintechs, and that comes from John Sculley talked about there's a mission, there's a purpose, and to me what that purpose is for the current wave of fintechs that we see is a real laser focus on a specific pain point within the financial ecosystem and solving that specific pain point in a way that we haven't done before. So to me, I think the fintech ecosystem is fantastic. It's accelerating the solutions we can bring to market. It accelerates innovation for us, but it's usually single point, single problem that is being solved, but in a way that lifts the client experience up and is really client focused, and that's where the mission comes in. So that's what I think is a little different, and I think we're seeing more acceleration of that focus on clients. That is the opportunity for all of us. I mean, I think I being at now JP Morgan and Chase, it's a company that has greatly embraced fintechs. So early on, I think there was the worry of they're going to come eat our lunch. I think there were some famous words that were said. Silicon Valley's coming to eat our lunch. And but since in the last couple of years, I think we've realized there's an enormous opportunity to partner, accelerate our business, and to continue to solve pain points that our clients are having by pulling those in, but then leverage what Schwab has and what JP Morgan Chase has, and that's the holistic client experience. That's something that the fintechs don't have and that banks and wealth managers have, is a focus on holistic client experiences. We bring it all together. We're an accumulation of those pain points. We're an accumulation of those point solutions. And when we do our job well and partner with fintechs, we can create a much better experience for our clients that's holistic, and that they come to us for that. So to me, that's where there's a really symbiotic, integrated experience that can come. And that I think working at JP Morgan Chase has been fantastic in terms of the exposure to being really aggressive about finding partners that help us solve our pain points in different ways. And just in the last year, we have announced a number of different partnerships, strategic investments across our lines of business in order to solve problems. And I can talk more about those as we go along.
Excellent. So you mentioned Scully's comment, and they're coming at us and eating a lunch. Mm-hmm. So we've seen disruption in the financial services before. So what is it different this time around?
I think it's, there's a couple things for why it's different this time around. And I mean, I think we've gone through this debate a little bit, and I can't wait to hear Michael take the opposite side maybe of this argument, which makes it more fun. But so to me, I think it is dramatically different in that you have to look at, we've gone through the financial crisis. That actually changed people's perception of financial services. And so this time around, fintechs are actually capitalizing on the lack of trust in our industry. And they're using that as a way of saying, hey, you know what, I have a more transparent solution. I'm thinking about you. I'm solving your problem. And it's a more compelling argument this time around. The second piece of it is this is the first time we're seeing a truly mobile generation that's been only digital and mobile. So this time around, we're starting to see people have money and have earning power in the millennials who only have been mobile and web in their entire existence. And so that's different than what we had seen in the earlier waves of technology within financial services. The ubiquity of the mobile device, I think, is another piece. And then finally, I think security. This time around, people are more comfortable with interacting online, and we've had advances within security. We have challenges, yes, as an industry, but that's an area where people now are more comfortable interacting with us, giving us, and us providing more services in a digital way. I think those are 4 elements that really have propelled this time of disruption in a way that we haven't seen in the past.
That's right. Michael, you can take the opposite end?
Of course I am. And in homage to the Cubs winning the World Series, I'll use a baseball analogy. It's deja vu all over again. And I've seen this before, and you've probably seen it before. Definitely seen it in online brokerage. And this happens, or this kind of continuum happens in a lot of disruption. First, you have the disruptors, typically, and particularly in financial services. They'll carve off an underserved market or a market that's not profitably being able to be served by the incumbents in their cost model. Right. Online brokerage, we know who those were, but you see those in wealth management, the Betterments, the wealth fronts, the personal capitals of the world. And then what happens is this quick follow. It could be through M&A. You saw BlackRock buy Future Advisor, Invesco buy GemStep, quick follows of Schwab, both of our alma mater, doing a quick follow with intelligent portfolios. But it's really just kind of plug the hole, strategically respond, not because necessarily they need to financially respond,
right.
But because there was something that resonated with that disruptive force that we need to kind of pay attention to it. And then the final phase, which is what I think we are in this cycle, is enablement, where either the disruptors pivot, they usually go to a B2B model, or you have M&A activity and they're bought, right. Or new participants come in the market, which I call enablers.
Right.
I think it was a senior leader that said, Silicon Valley is coming to eat your lunch. I think they're actually eating in your lunchroom. But these enablers are really in the business to help the larger incumbents adopt what's innovative and disruptive, but do it in their own brand, their own style, in their own workflow. And not necessarily try to copy them directly, but truly understand what resonated with that generation, whether it's the millennial, Gen X, Gen Y, and then put their own stamp, their own brand on it.
Got it. Bill, what you're doing at WealthForge is kind of like eating some sort of breakfast of the traditional banks, right? So are you, how do you play in that landscape, given, these players are large, right? They're well-established global players. There you are at Richmond, trying to change the world for your noble cause, if you would, right?
Right.
How's that the playing field, if you would, from your perspective?
Yeah, I mean, just to pick up on what Michael and Kelly both said, and Tito, to your question, the way WealthForge works in the world, what we do is we help entrepreneurs who raise capital, and then we work with advisors, folks like the advisors at your firms who want access to direct alternative investment opportunities. Yeah. And I think fintech companies and disruption does come in 2 flavors, to the point of deja vu all over again. I remember back in the .com era, it was kind of the first time when you could say B2B or B2C with a straight face. And that lingo has persisted. We're B2B, so we are here to help facilitate the trusted advisor relationship that exists between an advisor and their client. And so to keep using the analogy, what we want is to be invited into the lunchroom, to eat lunch with the large financial institutions. We want to be a valuable partner and a provider.
You're an enabler.
We are an enabler, yes.
Okay, so I just want to go back to what you made one point, Michael, around robos. You mentioned Betterment. I think there was a question. We did a survey of the audience, what they would like to hear about. Robo-advisory is one thing. What's your view? I want to hear your view, and then again, Kelly, you have definitely a strong view on that one. Yeah. On robo-advisory. Here to stay? Is it an enabler? Is it going to be the next ATM in a banking world? What is that?
It's here to stay in this way. Everyone tries to bifurcate them. It's robo, digital experience, self-directed, or it's an advisor, and you're starting to see something in between. For me, what comes forward now is really to understand the persona. Who are the clients you're going after?
Right.
What is the journey that you're trying to create for them? What are the key client touch points, the moments that matter, and what's the success? Then the technology layers in. So some of it is onboarding and portfolio construction, a very robo-like experience. But other things are leveraging AI and big data to really reach out to those customers for those moments that matter. That might be a phone call, it might be a meeting, it might be an electronic communication. So robo, as we know it, or as the disruptors came on the scene, was really more about portfolio construction and making it really easy for an early segment to come in.
Yeah.
Now, how do you move that up market to higher net worth, create that digital experience that everyone wants, that the way they shop and the way they operate in the world, but that's appropriate for the level of the client and the economics that that client segment can support.
Right. So Kelli, is there a role for firms like Betterment, Wealthfront, who are also gathering assets and doing advisory, if you would, compared to what the banks and the large advisory firms like yourself are doing?
Yeah, I mean, I think building on what Michael said, it's about creating, at the base of it, robo is not new at all.
Exactly.
It's actually portfolio allocation based on a risk score of a client. It's about rebalancing in a systematic way. It's about opening the account in the first place and having a separately managed account that's under an RAA. Nothing in that entire, and the performance reporting. Nothing is new in that. And in fact, ETFs, we'll call those not new now. It really is at the heart of it is actually a ubiquitous experience that we provide to our clients in the relationships that we provide. But what robo has done is it's created transparency. It's allowed us to create better value in our experiences to our clients, so we now can serve them much more inexpensively and commoditize the activities that should be commoditized, make those frictionless, make those activities easy to do. It's also provided, so I think a lot about anytime, anywhere access. That's a need that our clients have, and it's a need for the industry. Another need for our industry is to provide better value for our clients and cheaper solutions that allow us to be more efficient. All of us need to be more efficient with fee compression, the regulatory costs that we have. And then ultimately, we still want relationships. We still want to talk to somebody. Even millennials want to talk to somebody when the markets are volatile, when they want to do financial plan, when they want to do an asset allocation. So robo isn't new, but what robo does is it helps us provide better anytime, anywhere access with better transparency to the account. It allows us to provide a scalable fiduciary offering, which is important with DOL. It provides a scalable fiduciary low-cost offering for people who may want lower cost offerings or need lower cost offerings or be smaller accounts, and we need them in order to efficiently serve them. It doesn't need to replace the relationship. Instead, what it can do ultimately, I think in the next wave, will actually free up time for the relationship so that we'll have a better digital experience, we'll do it in a lower cost way with what should be lower cost, and then the people that we have can provide the advice, the counseling, the help for our clients when they really need that human touch. So to me, robo it's been here. It's a repackaging in a really interesting and low-cost, accessible way. But to me, that's actually a fundamental building block that we as an industry can use to better enable anytime, anywhere access, better value, and better relationships with our clients.
If I could add quickly to that, and most people label it as a millennial phenomenon, and frankly it's not. There's this new client segment, the digitally proficient, and that can be a baby boomer, Gen Y, Gen X. It's just the way people want to interact and the way they do business with an advisor, by themselves. And so the robo concept can go across all client segments, all ages. It's not just a millennial phenomenon. And if you really take a look at the numbers, everyone's talking about this big transfer of wealth. Well, the transfer of wealth we've been talking about that will go from baby boomers to millennials is about a 10-year process, right? So there's a lot of time in there that us Gen X and Gen Yers are going to have some needs for a digital wealth experience. It's about digital proficiency.
Got it.
Tito, I don't have a dog in the robo fight, but I'm curious, just listening to the discussion, I'd love to ask you all a question, and I didn't think to put this out in advance as a convene question we could use the app for, but I'm just curious. I feel like robo kind of comes in two flavors. There are those that want to act as a service provider to you, make your relationships more valuable, and I do believe there are others that want to disintermediate the broker. And so I'm just curious, by a show of hands, whether you all would consider robos, friend or foe as you think about your businesses. So, just curiosity, how many of us feel like robo is a value-added service to your business, and how many would consider it to be a competitive threat?
I raise my hand on both.
Yes, that's a fair answer. It appeared to be roughly half and half.
Half and half, yes.
Right.
So that's a great point. So let's demystify another one. So we talked about fintech, we talked about robos, right? Another big, we heard this phrase a lot, big data. Everyone talks about big data analytics. What is it? And how does that specifically in our wealth management industry, right? How can we use big data analytics to drive a better customer experience, if you would?
We label things as new and cool when we get this cool label that we go capital B, big, capital D, data, and all of a sudden it's new. The reality is that the industry has been trying to figure out how as the point was made earlier today, I think by John Scully, how do we harness the amount of data that we have to create really the ultimate goal is better services that are more personalized for our clients that reduce our risk.
Yeah.
That's ultimately what we're trying to do, and that's what data have been around for quite a while. We have better tools and services to enable us to do that, and it's now allowing us to do things. I think about a partnership that we did with On Deck at JP Morgan Chase, where we now can use data using the way that On Deck processes the data to approve a small business loan in minutes versus a month, which is what we used to do. And we're actually just partnered with TrueCar to do the similar thing when somebody goes and goes shopping for a car, and they can do that online, and then they walk into the dealer and their loan paperwork is already filled out and approved for them based on the data, instead of that taking a long period of time, lots of phone calls and stuff. What that does is it helps the client have a better personalized experience. We have quicker, more real-time understanding of the risk, and it allows all of us to really speed up the transactions that we're doing in a way that I think ultimately really greatly improves the client experience. So to me, it's an evolution.
Right.
Really trying to create those personalized, lower risk, faster experiences for our clients.
Got it. Michael, in your role as the head of fintech advisory for you at PwC, you actually get to meet really cool firms around the world, right? Mm-hmm. So specifically in that same area,
that's right.
As it relates to big data and into wealth management, what are the trends we're seeing there?
Yeah, and even PwC ourselves has this program called Secure. It's a big data analytics initiative, and some other early stage companies that we're seeing. Big data, or whatever you want to call it, is the data that you have about your client, and then synthetic populations that you can create, and then add in a little artificial intelligence. And so then what can you do with that? And particularly in wealth management, imagine a whole different level of what-if scenarios or planning, where a client could come in and say, well, I'm not quite comfortable with changing my financial relationship to you as a wealth advisor. And the wealth advisor is saying, well, give me a little bit of information, your name, your address, your 5-digit zip code, a little bit more information. And then with the data that he has at a derived data set, a synthetic population, 87% accuracy, probably knows how much equity you have in your home, what your liquid net worth is, how much mortgage you have, what's your income. Can make some very educated guesses, and rather than filling out a risk pro or financial questionnaire, saying, I know this is not accurate, we can go back and fix this, but let me show you what I would do for you.
Right.
Get the client excited, and then the client can fine tune. On the other side of that, what if scenarios is, okay, so someone that's 55 years old in your position against, everyone wants to know, what are people like me doing? Well, here's what the synthetic population of 55-year-olds with this information are doing. This is the insurances they have. This is the protections they're providing for their children. So it has a huge financial planning component to it. And then I love this part, it's the shock testing. Like, everyone manages risk around your portfolio and its financial risk. But if you live in a low-lying area, what's the impact on your investments of climate change? Or, based on your health history, what is the impact on your insurance and things like that? And can your financial life manage the shocks that are most likely to happen to someone like you, because you're using big data to get that perspective? And so those are the real life examples in wealth that we're seeing using analytics with derived data and the data that people have about their customer.
Got it. Michael's not 55, he's 42, so it doesn't apply to him. So let's stick to that theme for a quick second. So you get big data, right? We talked about experience for a second. Experience is only as good as the data behind it. Mm-hmm. Where does the role of back office, mid office, where does all the technologists in that area, how does that enable what we're trying to achieve here in the digital experience?
I know you're looking at me because this is a challenge that I face. Coming to JP Morgan Chase, I thought Schwab was complicated. Yeah, we all have complicated legacy systems that have been around for 35, 40 years that we deal with and build on. And Now multiply that with a large company that has done many acquisitions of many different back-end systems and back offices and middle offices, and now try to build a cohesive and seamless client experience across multiple lines of business, whether it's a Chase client or a JP Morgan client. It's really, really, really hard. So to me, I wish I didn't even have to think about this. Because as I think about, yes, digital is the mobile device. That's one tiny piece of it. It's a tip of the iceberg. Of course, there's the web experience and the way serving our clients in the way that they want to, whether it's web, on the phone, in person, on their device. And then you've got the advisor who's empowered to work with that client. Then you start working down and you start working into, for example, the middle office in your operational systems, in your operational teams, and what can they view, and then moving farther into the back office. The challenge I have, I'll give you a very specific example, is part of our business is a bank with a certain accounting platform that is under a bank regulator. And I have another accounting platform that is a broker-dealer accounting platform. And my digital experience, just for the summary of accounts that a client wants to see, has to cut across both of those different regulatory entities, entirely different data structures, everything different. The promise to me is to extract out of that, so that we don't have to worry as much. In many cases, we may not have the luxury of ripping out all of these systems and replacing them with one really cool new thing, but how do we extract above that so that then we can still create that seamless client experience? Because we've got to figure out better and more innovative ways to rise out of the disparate back office challenges that we face, and in order to provide the experiences that our clients are demanding of us. And this is where fintechs will eat our lunch, because they don't have the tech debt. And they can come in and create a seamless experience from scratch with the latest technology. You were saying, you can tell your story. It makes us all very jealous and envious. And they will eat our lunch because they'll create a better client experience in the end, because they don't have that back-end infrastructure. So we as an industry have got to figure out ways of rising above those challenges with the ultimate goal of that seamless omni-channel experience, allowing clients to dictate how they want to work with us.
Wow. Bill, you've been on both sides now.
Yeah.
So do you have a great appreciation for what transpires on the backside?
Yeah, and this is a fascinating topic for me, just for that reason. I've seen both sides of it, and I had a little bit of a similar experience to what Kelly's describing at a prior firm, where we really went through a very long project, over a year, and we really dove deeply into the back office systems that were being used across various investment-related bank businesses, trust businesses, brokerage, full service retail brokerage businesses, wealth management, asset management, and trying to kind of figure out how do we gain efficiency, create a better, more consistent client experience. So then I left and joined a 30-person technology company. And I was sharing before the discussion with my panelists here that it just strikes me as kind of interesting, just as an observation, that at WealthForge, with a 30-person team, we have a technology platform, and I think Bob spoke to this in his presentation this morning about cloud. We have a technology platform that is 100% cloud native. We run on Amazon Web Services. Our application is built with microservices architecture, with each service that provides a specific business function built into Docker containers, which connect to an Angular front end. It's a completely modern technology stack. But of course, we got there because we had the benefit of starting with literally a clean sheet of paper. Yeah. And that technology is as secure, and I would even suggest in some cases more secure than some of the technology that the larger incumbent firms operate. It's more scalable. But yet here we are, this teeny tiny little business, and it almost feels like it should be the opposite. It feels like you guys should have the awesome technology with all of your resources, and we should be struggling from behind. But I'll just share that observation that it's not the case. And that's where, as we talk about fintech disruption and innovation, kind of the opportunity and the threat comes in. So again, we're not trying to eat anyone's lunch. We're trying to, that's maybe what we can bring to the lunch party.
Got it. So Michael, given that some firms don't have the luxury like what he described that they do, start from scratch, challenges of what Kelly described, what are the best practices you've seen specifically in that space?
In partnering?
In partnering, correct.
In specific, well, talking about enabling companies, the very problem Kelly was talking about is with getting disparate data from different sources
Yeah.
and putting that disparate data, structured data that you have in your databases, field-based data, unstructured data, things that like reports and news is more structured, other types of unstructured data, and third-party unstructured data from the world, and pulling it all together to create these experiences that we're talking about, where you don't have to replace all those disparate systems, you just need to have access to them and be able to centralize that data. And there's a lot of startup activity of not only solving that data problem with a series of APIs on top of that, but then how do you quickly iterate and build these digital experiences, omni-channel, web, tablet, phone, native, to create experiences for incumbent companies off of that database without having to solve the problem internally.
Got it. So talk about challenge. What other challenges do we see in this marketplace? So we talked about big data, we talked about digital. What else do we see in this marketplace that yet needs to be addressed? Kelli, I'm going to revert to you right now, this one.
Well, one thing I think that impedes the client experience, let's go back to the clients for a minute, is still security. I think we as an industry, I think Touch ID is actually amazing. Amazing. Because it shows us that logins and passwords don't have to be a barrier between us and our clients. I do think that a challenge we face as an industry and where we will see and continue to see great innovation is in removing those walls between us and our clients and their data. Remember, it's their data, it's their money. Removing those walls, but doing it in a highly secured way that doesn't cause friction. I just don't feel like we've really solved that. I think Touch ID has shown us it might be possible, but that is one that I think we really need to change for our clients' sake.
So biometrics, that's a big one.
Yeah, but I don't. Biometrics might be one of the solutions. I don't know what the other. I think there's opportunity to think outside the box. You know, as John was saying, it's important to look at a problem from multiple angles. That is an area where we think we need help in thinking from multiple directions.
Got it.
We look at this from a bigger perspective. It's a strike zone of secure collaboration, which not only is identity and login, but secure communication, secure documents that go back and forth. The email things that we're talking about today wouldn't exist if I had a system that when I sent an email it expired, self-destructed, or I could call it back. And so there's this, a lot of startup activity in the space of controlling assets once they leave your firewall, once they're outside your firewall, so that you can get them back and they're not out in the public domain. And leveraging blockchain, you're doing it in a distributed way. So there's no central repository of anything. There's a lot of interesting activity going on in there right now.
Got it, cool. I'm going to take a pause right here to take any questions from the audience. Anyone? Questions from the panel? All right, then I'll throw it back one more to you guys.
Wait, there's one right there.
Hi. Can't see because of the lights.
Hi there. I was wondering what you think of this new wealth management model that Bradley spoke about this morning. Do you think how do you see wealth managers and the new robo capabilities and the big data connecting?
I'd love this one. I mean, it goes back to the hybrid model, like before you apply technology or big data or the tools and the open platform that you saw, it's really defining what those personas are that you're going after. Demographically, who are they? But psychographically, how do they behave and what do they want? The journey that we want to take them through, prospecting, the way you market to them, onboarding, the way you deliver advice, the way you monitor and stay connected. And then those moments that matter, like how do they want to be contacted digitally or otherwise? And once you've done that layout, then build the technology to create that experience. And that experience could be different by client segment level or by demographic client segment level, the desires of the customer, and be priced differently. And that, the big thing that we heard in a survey that we did, it was called Blurring the Lines, Financial Disruption. What it really came out is people in the industry thought the opportunity was a client-centric model that enabled an experience that was designed to the client and the way they wanted to do it. And the tools and the features didn't matter. It was the journey that they wanted to be taken through by their advisor.
I think I really like, for example, the 4 models that Oliver Wyman showed this morning and the different business models with the different companies aligned against it. But picking up on what Michael's saying, I think the next level of that is many of those models within our own businesses, because that's how clients different clients want to be served differently. And so I don't think it's as simple as slotting a whole business into one of those models. So I think they were really thought-provoking, and there's a lot that they can do to help us.
Right, and pulling big data into that, the way an advisor reaches out, the same way I explained what-if scenario planning or risk shock planning, that those type of things should bubble up from the CRM and the data that they have with derived data from externally. That, and we saw this in the demo of the open platform, coupled with news and information to have a really meaningful conversation with a client at a time that it mattered, to them, or was topically relevant.
You're talking about moments that matter, and that's something in a past life I'd seen quite a bit of work done on. When are those moments in a client that they either move their money away from you, they bring in a lot of money from you, and when you look at the flows of money overall in and out, there's of course the spending that people do and the small adds, the small takeaways of their money on often a monthly basis. But most of the TOAs in and out of a firm are actually driven by a small number of clients doing big movements. And those big movements are usually predicated by a moment of truth, or what we call the jump ball. And so that's, I think, a really interesting opportunity, not just for pattern recognition, but to start to understand and know ahead of time what's going on in a client's life that can help us see ahead of that moment of truth and when that jump ball is coming. To me, that's a really interesting opportunity for us as an industry, is to move just beyond, okay, here's a few, we can model and do an attrition model, and there's a few variables in it and some pattern matching, but to really know and understand a client and their life, and to have the warning signs ahead of time. I think that's a really interesting space.
So let's talk about interesting space and innovation. One crazy long shot idea, if you guys had one, right? What would that be? So Bill, let me start with you right now.
Well, the one that I'm really interested in, just curious about, has already been discussed. It's the B word. Michael brought it up earlier. It's blockchain. Bob gave a great overview and explanation of it. And actually on the plane ride down last night, I was reading a really well-written Oliver Wyman sort of white paper that gives an overview of the opportunity of blockchain in capital markets. So if you're curious, I'd encourage you to look it up. But in my background, Tito, I'm a clearing guy, right? I started in the clearing business. I spent 20 years in the clearing business. I'm less than a year in fintech. And so I think about it just in terms of how much it could potentially really change our world. If I have an asset, I have 100 shares of JP Morgan, and I want to sell it to Kelli, and we agree on a price, and we're able to confirm with each other that in fact I am the owner of the asset because it's written in this immutable ledger of who owns what, and the same for Kelli's cash. We could exchange that through a blockchain type distributed ledger. If that happened, we didn't need an exchange necessarily, unless we had to get someone else to tell us what a fair price was. We didn't need a central securities depository to transfer the ownership between the two of us. We didn't need a custodian or clearing firm to do any of that. We didn't need a wealth management firm necessarily. And so, I don't think that's the way all that ends up playing out. I think that those of us in the room will find a way to work that opportunity to our advantage, to our clients' advantage, most importantly. But that's one that is, to me, just really kind of curious. I'm interested to see where that takes us.
Yeah, I think Bob would agree with you on that one, right? Absolutely. Michael, what about you? Crazy idea.
Crazy idea.
Come on,
to start a company right now?
You've started multiple companies.
Well, it is the blockchain arena. I agree with Dave when he kicked off saying there's this sixth wave or the sixth paradigm in computing. Like blockchain is going to be at the level of the internet way too early. But what Bob said around digital identity, that's something that I could see starting a company around. And it's more than just who I am. I can see the blockchain and a distributed ledger being able to handle digital identity. But it's more than that. For me, it's a personal vault that not only do I want my personal identity, and this is horrifying in any other technology, but and terrifying, but given that it's not centralized, to have my passport, my identity, everything about who I am that's in my control. Add that health tech, my health records, what I own, my assets, whether the securities or my home, is all within the digital identity and digital vault that I am in control of, that my doctor provides me data, my financial service firms provide me data, and then I can entitle who I want to get that. My doctor, my accountant, my attorney, my wealth manager, my estate planner, my kids, my executor. That all that is one place. And I think the blockchain and the distributed ledger makes that happen.
Yeah. Your info is probably out on WikiLeaks already. So
Sorry.
it's on WikiLeaks. Your information.
Yeah, I did notice the disclaimer, like you guys all know all that now, right?
Exactly. Kelly.
I'll take the contrary view and go, it's because
Have to,
yeah, I always
yes.
have to. Yeah, less is more. I just think simplification is, so it's not a specific technology, and it's not a specific really cool thing that's out in the future. It's actually less, it's simplifying. It's doing the crap for me as a client. It's doing it for you as an advisor, so that we are so bogged down as an industry, and we will get buried under the weight of our complexity, our inefficiencies, and our challenges, and our clients will no longer take it. And that's when we'll get our lunch eaten. So the thing that fintechs show us, going back to fintechs
Right.
as our theme,
Sure.
is that simplification is the key to the client experience. And if we don't figure out how to take our integrated, holistic, and full service experiences and make those simplified in a great client experience, we will get our lunch eaten. So to me, it's, I used to keep a Post-it note in my office that said, doing the mundane better than anybody is really cool. And underneath that, it's about the basics. We gotta nail those in our industry, or our clients will lose faith in us. They won't wanna do business with us. Inertia will take over. So it's a different pipe dream than, but it's, I think, survival for us.
That's well said. So we're running out of time. This was a preview into what happens at our digital symposium in New York. And for those of you who want to see more of Kelly and Michael and Bill, welcome to join us next May in New York City. We don't have any time for questions right now, so I suggest if you have questions, feel free to ping them as we're mingling out here with you guys today. Thank you so much to a wonderful panel.
Thank you.
Thank you.